Can we make money on airline stocks? That's the ultimate question. Some of the bigger investors like Warren Buffett, David Tepper, and others did say that they dumped their airline stocks in the last few months and airline stocks got hammered. But in the last week, there is a lot more optimism about airlines than before on the heels of possibility of the vaccine by the end of the year. So in this video, I want to talk about two things. First, I want to discuss 4 major reasons investors are staying away from airline stocks. Second, I want to see if there's a light at the end of the tunnel and is this a good or not a good time to invest in airline stocks. And then I'd like to give you my favorite airline stock. If you like this video, give me a thumbs up, subscribe, and let me know what you think about the airlines in the comments below. And let's rock and roll! It's no secret that airlines are struggling in this crisis, but I don't want to discuss the obvious reason the airline stocks went down. It's well known and I don't want to spend time on it. I'd rather discuss what keeps the airline stocks at the bottom and why big hedge funds and money managers are avoiding these stocks like a plague. Here are some of the issues that keep the airline stocks down. First of all, the airlines is one of the industries that cannot control their own destiny. I understand a lot of industries cannot control their own destinies until the economy restarts, but at least some of them can readjust. For example, many retailers, even though struggle, now sell online. Many more industries are moving to the cloud, working from home and so on. But with airlines, what can you really do? Until people start flying, there is absolutely nothing they can do to fix it. What scares, for example, Warren Buffett is that people are so used to working from home now that he's concerned that the consumer behavior may actually change in the future and people will fly a lot less than before after this illness goes away. Second reason the investors are staying away is the fact that airlines have to ask for a government handout to survive. Airlines were not forced to hand over equity shares in exchange for nearly $25 billion in grants and another $25 billion in loans. But the Treasury Department did require the companies to offer special warrants, which essentially amounted to stock options based on an airline stock closing price whenever the deal with the government was reached. For example, for American Airlines and Southwest, the warrants were based on their April 14th closing prices. That gives the government more stock and therefore a bigger share in these companies as airline shares rebound. For example, if American Airlines stock price returns to where it began 2020, the federal government could end up with about 6% of the airline's shares, worth more than $850 million. But of course, it would be a small reward for the combined $10.5 billion in aid the airline is expected to accept, including $4.1 billion in grants. The government won't have any voting shares in airlines under these deals, but the stimulus bill bans dividends, stock buybacks, puts limits on executive pay, and requires companies to maintain pay and employment numbers through the September. So a lot of requirements for the airlines in exchange for the government money, and many investors don't feel comfortable with that. Third reason why many investors are on the sidelines is the middle seat problem. Since maintaining social distancing remains a priority, already 3 major US airlines, Delta, Alaska, and JetBlue, have officially said that they are blocking middle seats on flights. American too is blocking many of the middle seats on its flights. Even low-cost carrier Spirit Airlines is blocking middle seats on most flights, and other airlines are planning to follow. So why is blocking the middle seat such a problem? It's not if you only have 15 to 20 people flying on a plane, but eventually, if these airlines plan to survive, they need to make money. Having the middle seat blocked makes airlines unprofitable unless the ticket prices are hiked by at least 50%. Passengers seem to be largely in favor of blocking the middle seat because many are worried about the illness and people just want to have their personal space. However, others are concerned about what that means for the airfare. Many people are willing to tolerate being cramped up between 2 strangers if they can pay a lower ticket price. Hey, don't pretend that you're not one of them. So what is it going to be? A middle seat blocked but prices hiked, or lower prices but middle seat open? Looks like the government and industry are leaning towards having middle seats blocked. Just recently, the chairman of the House Transportation and Infrastructure Committee urged U.S. airlines to maintain at least one seat between all passengers. In a letter to a group representing major airlines, he said airlines should leave at least one seat width of spacing between passengers and to dynamically adjust fares as needed to account for the effect on load factors. How long will the airlines have the middle seat blocked? Who knows? Based on this uncertainty and the possibility of the middle seat being blocked and ticket prices hiked in the foreseeable future, many investors are worried that it may dampen an already reduced demand for flying. Last but not least, the problem with airlines is too many planes. Warren Buffett talked about it at his Berkshire shareholder meeting. He was cautious of current airline fleet sizes and the ongoing maintenance costs until the skies reopen and passenger volumes increase. Airlines will likely need to reduce their fleet sizes to match future flight capacity and reduce long-term costs. To me, that actually spells trouble for Boeing and Airbus. Boeing just secured a $25 billion loan from private entities, but still, if airlines reduce their fleet, who is going to buy Boeing's planes? I know I'm listing all these problems, but are there any positive news? There is one, but it's a big one. The good news is the possibility of a vaccine soon. All the travel-related stocks, including the airline stocks, have rallied hard in the last week on Moderna's positive Phase 1 clinical results. As a matter of fact, the legendary investor Bill Miller just recently said about the airlines, "If you don't own them, you're making a bet against the vaccine." Wow, that's a big statement. Clearly, Bill Miller is betting on a vaccine to be developed soon, which in turn may save the airline stocks. Because if there is a vaccine, then some of the negatives for the airlines that I just mentioned could be negated, since consumers will be more willing to get on a plane and demand may return at least in some capacity. The question is, when and will the majority of the airlines survive until that happens? David Calhoun, who is the CEO of Boeing, recently told NBC News that even though he remains confident in the industry, one of the major airlines may go out of business in September. Which airline he had in mind that may go out of business, he didn't say. But the next morning after he said that, investors started running out for emergency exits. In general, I think airlines is an investable industry, as long as you take a long-term view, and by long-term I mean not 3 to 5 months, but rather 3 to 5 years, and if you consider which airline you invest in carefully. I think some of them could be winners, but some may not survive. And this is when I'd like to talk to you about the airline that may have a better chance to still fly after this crisis is over. The airline I want to go over is Delta Airlines, stock symbol DAL. What I like about Delta is that they are quicker than most of the other airlines realize that they need to do major cost cutting to survive this. I like that their management team and their CEO Dave Bastione have quickly realized that they need to retire older and fuel inefficient aircrafts in a move which can save them money in the long run. They plan to permanently retire its 18 twin-aisle Boeing 777s by the end of the year, as well as its remaining MD-90s that are going to a boneyard and have no recoverable value. Instead, Delta now will rely on the Airbus A330 and A350 instead of the 777s for long-haul flights, because they burn 21% less fuel per seat. Delta CFO recently said that he expects cash burn to fall to $40 million per day beginning of July, which is $10 million better than the company's previous forecast of $50 million per day and on track to be cash flow break-even by the end of 2020. That means that Delta expects it can reduce daily cash burn to zero by year's end. That will likely come in part via workforce reduction, but Delta hopes to accomplish much of what it needs on a headcount with a voluntary separation and retirement packages and not a layoff. The CEO also sees $14 billion cash balance at the end of June. Airlines in general cut most of their schedules to the bone recently, especially for international routes. With few people on board, the flights are not economical to operate. Instead, Delta has responded to huge interest from shippers to move goods and vital medical supplies by turning passenger aircraft into temporary freighters. After so many cutting measures, a solid balance sheet and tight grip on the situation by the management team, I feel pretty confident that Delta can survive this crisis and could be a winning investment in the years to come. I hope you enjoyed this video, and if you did, please subscribe, Write me some comments and let me know if you own any airlines and what you think of them. And I'll see you next time.